Joining me now with more is Jim Thorne, Chief Marketing Strategist at Wellington Altus. Jim, thank you so much for joining us, especially after the holiday yesterday. With stocks set to round out November with gains, what's your take on where we could go from here?
Well, I think 6,000 on the S&P 500 was my target, so we're there. I'm looking into 25, and we have a very good shot of getting to 7,000 on the S&P 500, maybe even stretching it to 7,500 by February of 2026. So I'm very constructive on the market, and I'm very constructive on risk assets.
Then I want to hear from you, Jim, in terms of what is working, what is causing you to be optimistic?
It's Mr. Trump getting in. We have tax cuts, deregulation, pro-growth policies. I think the big question is going to be what this feels like after sort of the post-election euphoria wears off and we start focusing on fundamentals. So how long can small caps and mid caps run? Does everybody flow back into the Mag 7? Does Bitcoin continue to run as hard as it has? I'm very constructive on risk assets, and I do think the big unknown is the fact that the Fed is late in terms of cutting, and the private sector is close to a recession, and what's holding up the U.S. economy is government spending, which I think with Elon Musk and team is going to be significantly reduced going forward.
And so what does that mean for the economy in the short term?
In the short term, I think what's going to happen is we have a real shot at having a growth scare, right? But having said that, it's all about psychology right now. Do we look through that because of the pro-growth policies of President Trump? So that's one of the known unknowns that we'll be looking at and monitoring going into 2025.
Interesting. So, of course, earnings continuing to grow. The U.S. economy showing it is growing as well. Consumers do seem to have a willingness to spend when it comes to items like clothing and shoes, according to some of these retail earnings reports that we've been getting. Jim, what's your expectation for holiday shopping this season?
I think it's going to be pretty good, and I think consumers are going to shift away from spending money on services, which is highly inflationary, and going back to the goods area, which we're seeing early signs of deflation. The real key in this is going to be the psychology effect of, do people feel that they have a secure job? And we're expecting some significant economic revisions coming in the first quarter of next year. And how does the consumer feel about that? I mean, full-time jobs have declined by 1 million under the Biden administration this year. However, you've had a 500,000 increase in government jobs. What happens? What's going to be that yin and yang between those two? If people feel that they're strong and they're comfortable with their jobs, then, things should go well. If Mr. Trump can get the drill baby drill policy in place and gasoline at the pump gets to $2, then we can get that low end area of the consumer that has been hit very hard by inflation coming back. But we've got a lot of unknowns going into 2025.
Interesting. So by and large, Jim, do you have a target on the S&P 500 by year end and by 2025?
My year-end target for the S&P is around here, and for 2025, it's about 7,000. And if we go into February 2026, I think we can get to 7,500. And I think then the cycle suggests that we need to prepare for a significant correction.
Interesting. And in terms of what would cause that correction, I'm sure it would be a recession, something to that nature, of course. We have already seen the expectations for rate cuts be dialed back or tempered a little bit based on the strength that we continue to see in the market and still sticky inflation. Is that what you think causes the Fed to eventually get closer to that 2% target, perhaps a recession?
Yes, I think you've nailed it. And so it's going to be that push and pull. The Fed is late, so the private sector is contracting. The economy feels like a wartime-like economy, and when you shift from an economy that is based on government and central planning to one that is more private sector led, when we look back in history, we have a growth scare. So my base case is a soft landing in the United States because of AI and innovation. But, it's going to be a very, very, very close call. And so we would not be surprised if people get upset and concerned about growth in 2026. And I think that's what we need to deal with as we get later into 25 and early into 26.
It sounds like some of these AI and technology stocks, Jim, are on your radar. I'd like to hear if that is a sector that you're optimistic on, in addition to other sectors that potentially could benefit from some of these policies that the incoming administration is intending to enact.
Yes, my call is I like innovation, AI, I like banks, I like industrials that are tied to AI, I like Bitcoin. Some areas of consumers are starting to look very interesting, and I think you should avoid, energy, and I think you should avoid anything that's in the crosshair of the Trump administration, which would be large cap pharma and defense stocks. I think those are the areas that I think. So it's going to be a stock picker's market. I know that's an overused term. But having said that, I'm very constructive on the U.S. And I think, between now and the end of the Trump term, I think, yes, the S&P could be close to 14,000.
Oh, wow. Okay, so very quickly, Jim, if you have a number, we are going to get that important jobs report next Friday. Is there an estimate that you expect we'll see?
No, I'm much more long term. I don't play the bingo of short term, but I will say, the private sector is contracting, and we really need to sit there and be concerned. Here's the risk, right? Monetary policy is a lag, and so the real economy next year is going to be dealing with 5% interest rates, even though the Fed is cutting. If the Fed cuts in December, that cut will not be felt until August of 2026. That's how late they are.
All right. Jim, we got to leave it there. Thank you so much for joining, especially after the holiday. That's Jim Thorne, Chief Market Strategist at Wellington Altus.